sorry, 21 million coins, and current current circulation is 18.5 million bitcoins, with about 600 just is divisible per bitcoin. And Bitcoin allowed the idea of smart contracts, voting, forking rights to be used by the community for their own benefits. And we will discuss more about smart contracts in the future slides further. Bitcoin's a decentralized asset. That means that it allows for cross-border transactions much quicker. You're able to do it easier, no limited, no timeline. You know, you can do it daytime, nighttime, Christmas Eve, New Year's Eve. There's nothing that will stop the transaction. As long as the miners are keep going, the transactions will keep going. In the crypto space, Bitcoin's acronym is known as BTC, while as in the traditional trading space, as in like Forex, it's known as XBT. And since Bitcoin started with the idea of smart contracts, Ethereum ideally wanted to build on this smart contract. So Ethereum is an open source network. It's created by a Canadian Russian named Vitalik Buterin in about 2015. Is known as the father of ICOs. ICOs is initial coin offerings, very similar to the traditional IPOs that happen within the markets. It's the second largest cryptocurrency by market cap behind Bitcoin with $88 billion. This open source blockchain pretty much allows other cryptocurrencies to solve traditional problems without focusing on their own platform. They sit on the Ethereum's platform and they use Ethereum's platform to focus on solving other traditional problems by enhancing the smart contract capabilities that Ethereum already provides. Ethereum pretty much paved the pathway for all the cryptocurrencies. There was at about 2018, there was a boom of ICOs, 2018 or 2019. And because of Ethereum, all these other cryptocurrencies realized they were able to start solving traditional problems. Some of them turned out to be scams and started flooding the market space. Moving on, smart contracts. With smart contracts, it's ideally a regular contract, but it's stored digitally. And the transfers, everything happened digitally without having third parties involved. So what happens is the terms and conditions and rules are written as code on the blockchain itself. It's a pre-programmed contract. Within the rules and terms, whenever the event is triggered, the smart contract's executed according to the code that's provided. Once it's executed, the monetary assets that's within the smart contract is executed and sent out to its liable owners. And the idea of regulators into this space, what happens is regulators are able to see how the smart contract, if it initiated correctly, if it initiated on time, where did the lag happen? Because of the smart contracts, you're able to pinpoint the exact area where the chain of command has stopped or has delinked. That's where people can perform better or create their services better, enhance their area of that particular expertise. That's what smart contracts, ideally you would not need the area of notarizers or lawyers to get involved once smart contracts become much more adopted by traditional spaces. Now that we understood, now we looked at Bitcoin, Ethereum, let's look at how to store this cryptocurrency, because storing the cryptocurrency, it works very similar, but there's little differences. So we start with an example. We start an example of an email, either a company email or a personal email. An email has abcdeft@gmail.com. This username is used to identify the user within any email space around within their platforms to send and receive information. And well, right now in Vancouver, you can send and receive money through the email transfers as well. So, but the password is what is crucial, where the password helps to access the email, as well as you're able to recover your email if you have lost it or any issues have happened. It's very similar to a crypto wallet, where either it's a hardware wallet or a software wallet, but They have their public keys, like Mahesh sir mentioned, and a private keys. So public keys is used as a send and receive for people to transact within the crypto space. And it's also known as it can be known as your identifier on the blockchain as well. But the private keys, it's very important to keep that very safe because it's used as a recovery plus a backup. But in this space, since Bitcoin and cryptocurrency, you're your own holder. There's no one else who will make a decision on your behalf. So if you give away your private keys, there's no way you can recover your cryptocurrency if the person you gave your private keys to decides to take your money out of your wallet. So the idea is that you hold your own currency properly. With storing cryptocurrency, there's multiple storage techniques that are involved. Right now, currently, there are three main storage techniques. One is hardware wallet, second is software wallet, third is exchanges. With hardware wallet, ideally it's meant for long term. Software wallet is meant for short term, and exchanges is meant for trading. Each of these have their own benefits and pros and cons to it. So with hardware wallet, first what happens is since it's long term and it's decentralized, plus it's offline, so you're storing your keys, your private keys, which is your private keys are stored offline. It's written down in a piece of paper and it's kept in your house. It's not kept online on your iPad or your cell phone or your laptop. Depends on the hardware wallet that you have limited space to store. That means you have limited type of cryptocurrencies you can store. So either you can only store Bitcoin, or you can only store Ethereum, or Bitcoin and Ethereum, or Bitcoin, Ethereum, Litecoin, Ripple, and a few other currencies. You also have limited access, whereas you need to do a few steps to get access to your cryptocurrencies. It'll take maybe it's about like a 3 or 4 step process to actually get in hand with your cryptocurrency. So it is not as easy as pulling it out, putting your fingerprint in, and getting your bank account information on your phone with regards to hardware wallets. Because of this limited access, there's also multiple security steps involved when it's sending and receiving, mainly sending transactions, but receiving as well. But between these, there's multiple security steps. So to actually send a Bitcoin from this ledger hardware wallet right here, you have to have about a 6-step process to finally confirm. You would confirm the address you're sending it to, confirm the amount, everything you would confirm multiple times so that you yourself are sure that you want to send it to this address. Finally, with hardware wallets, private keys is what is important, and the private keys is with its investors or with the users or with the holders. There's no one else who has the right to take this private key. It's upon the user's discretion to pass it around, but it's recommended, really recommended to keep it personally in a safe or close by. With software wallets, yes, with software wallets, it's ideally short term. And software wallets can be centralized or decentralized. What I mean by centralized is that there's a company that's controlling. There's a company that has created a software that will hold these cryptocurrencies. But decentralized is the community that is involved behind this space that is holding it, and the voting and the voting rights that get behind it is the community members who vote to put these people in front to actually create this software and create this decentralized space. So if a centralized location like a centralized software wallet gets hacked, or it gets stopped, or regulations is put on it, it would have to shut down, where it would require users who are holding cryptocurrency on that wallet, they would not be able to pull out the cryptocurrencies. There would be a lot of issues required on that. But with decentralized, if, for example, Canada doesn't allow me to use this exchange, I can go to United States and open up this exchange and work with this exchange and retrieve my cryptocurrency. So that's short-term wallets. Also, it's online. When it's online, your private keys are stored on your computer. It's stored on your device. They have unlimited space where the wallets allow you to store a lot of different types of cryptocurrencies. The amounts increase, all types of things you're able to do with the online wallets. You're able to stake, you're able to liquid pool, all types of things you're able to do with software wallets. And main thing is it's a quick access. Like I can stand here and send a Bitcoin while I'm doing this presentation. That's how quick the access is. And whoever's sitting there, I would decide to send it to, would get it while this presentation is going on. So it's very quick, it's very easy to do it. But the main thing is your private keys are stored on your device, where it would make it an issue if you had a cell phone and your cell phone got lost. And now if you can't recover your private keys, you lost all your money. Or if you have a laptop that got hacked, if you can't recover your private keys, you have lost the money. The third way of storing cryptocurrencies is exchanges. Mainly, this is meant for trading, the purpose of trading only. So you would trade your Bitcoin for Ethereum and vice versa, or other cryptocurrencies for more monetary increase in value. The idea would be exchanges here is known as exchanges. It would be accepting all types, credit card payments, Visa payments, debit card payments. They accept wire transfers, and they never get shut down except for upgrades. They only do upgrades every so and so often, maybe a couple months they do an upgrade and they're down for about an hour and a half. But they're never off on New Year's like Forex trading is, or they're never off on Christmas Eve. Every day they're out there trading, and it's open. And as you guys can see, main thing is you don't own your private keys here. Is that whatever cryptocurrency you're holding on these exchanges, if the exchange gets hacked, it gets shut down, you lose everything. So this exchange right here, this is a list of exchanges that you can see back here. Is Binance, Bittrex, Bitfinex, Bitstamp, BitMEX, Kraken, Polynex. All these exchanges have been victims to hackings. Within these exchanges, people have lost money. Now it's up to the exchange's discretion to pull out from their own private accounts and give it back to the users. That's up to the discretion of the exchange. But the idea is what, that if you're holding your currency on an exchange, you don't own it. It's just a gamble, pretty much. You're just gambling that you might always hold that currency, unless you either move it onto an online or hardware wallet, software or hardware wallet. Now, with sending and receiving cryptocurrency is very similar to a credit card transaction, where a user or a customer A will go to a business A and he would like to transact for an item. Let's say it's a cell phone. He would pull out his credit card and scan it, or here we would tap it, and he would take the item and go away. What would happen is within that, there's different keys that are linked between the credit card or the software that they have. The similar thing is happening with cryptocurrency. What happens is the customer A would take what you call a wallet, like how we shown right here on the bottom left, a wallet, Bitcoin wallet, hardware wallet, would take it and they would scan the business A's receiving address. Once it's scanned, they would send the Bitcoin and it would be into the business A's wallet, and they would walk out with their uh, tangible asset. They would just walk out with whatever they wanted to buy with. It would be as easy as that. A lot of companies out here in Vancouver, they're accepting Bitcoin as payments, like coffee shops out here. They're accepting payments. We have Starbucks accepting some payments. So there's a lot of easy ways to transact with cryptocurrency quicker. It depends on the software they're using. A few recommended practices while adopting Bitcoin and storing Bitcoin. It's very crucial that the first one is that you never give away your private keys. That's something that should always be in the front and the back of the user's head. Second one will be a separate and dedicated device meant only used for cryptocurrency. Why we recommend this is that a lot of times when people are surfing the net in cryptocurrency, there's a lot of these advertisement keys that are going out. People are advertisers are looking in, finding out what you're scrolling through Google, and then eventually this data gets sold. What happens is people get targeted attacks. Number one, people get emails sent to them saying that, hey, you received X amount of Bitcoin, and they start extorting money from individuals. That's number one. Number two is that, let's say your personal device shuts down and it's a dedicated device you use to store your cryptocurrency, that goes away. So the idea for a dedicated crypto device would be for complete protection, that you're only using this device to go through an unregulated market that is forever changing, and it's always going to be forever changing because it's brand new. It's this cryptocurrency, it's like what Google was in the 1990s, just coming up, just a brand new, just a vision. And whoever got in, other people was sitting out looking in and just questioning it. So this type of thing, but the only difference is now Hackers have got more advanced. They know what to do. They know how to target. It's just much better to stay out of their eyes and views by having a dedicated device. While having the dedicated device, you have to have a secured connection line. That means that you cannot secure internet connection line. You cannot go to a coffee shop and access your Bitcoin addresses. You could, but it's not recommended that you do that. So whoever's sitting there looking to pry into your computer or whatever they want to do, they can easily get in since it's not a connected network. It has to have a lock beside the uh, Wi-Fi address of it. A third one would be a use of VPN, a virtual private network that would ideally shift or bounce your IP address and give you a different IP address from where you're sitting. You would also use a 2FA factor authentication. So I'm not sure if any of you, if everyone's accustomed to Google Authenticator or OTP. So what happens here is you would ideally put a password and then you would go on your phone onto this application and you would have about 15 seconds to put in the code. That's the same on the application. You would put it onto your platform. So it would link up and you would be able to get into your account. So it's just a second factor authentication for privacy factors, just so that you don't get hacked. And as well, finally, we would also recommend you to have a password generator. This would have like password generator generates random letters, numbers. You could choose it according to symbols. It generates it randomly. So it has much harder chance of any brute force attack or any type of attack to try to break this chain. Finally, while recommending Bitcoin practices, we recommend never give away your private keys. That is the sole purpose of having your Bitcoin. You never give away your private keys. Let's look into some real world cases of Bitcoin. So on one of the famous days on Bitcoin is May 22nd, 2010, known as Bitcoin Pizza Day, is when an individual in Florida asked for pizza in return for some Bitcoins, and he paid 10,000 Bitcoins at that time. And from Papa John's, he wanted pizza, and the individual in Britain, he said, okay, I will get it done for you. And that's how the transaction happened. But the crazy part of this transaction was it was a cross-border transaction, number one. Number two was that the tangible item appeared at the user's house. So it's known as one of the biggest days in Bitcoin because it shows how fluid it can move and how quick it could move and who can adopt it if they're willing to adopt it. Second is Wabi. And Wabi is a cryptocurrency that has its own blockchain called the Wabi blockchain. They seek to solve the item of counterfeit problems, solve the problem they seek to solve the counterfeit problems. Pretty much what happens is they're usually in the eastern part of the world, where it's in China right now, in China, Taiwan, and Japan, where what's going on is a lot of baby formula is counterfeited, liquor is counterfeited, clothing is counterfeited, a lot of items are counterfeited. So Wabi tries to solve this by using the supply chain management, smart contracts, and voting to allow individuals to see exactly what's going on with their product, who signed off on it, who's responsible for it. There's a QR code where if for example, this phone right here is on the Wabi blockchain, there would be a QR code where you would scan it and it would tell you exactly when it was manufactured, who signed off on it, where it went to, who created it, where it went to, and how it got authenticated. It showed you every step till it gets to the shelf. So you know the item is authentic and it's not going to harm you, rather than bring you certain types of joys that you're looking for. Another real world use case that's going on is land grabbing. This is a big issue because 70% of the world live on a tentative contract, pretty much based off a piece of paper saying that this house that we live in is your house. But now in Kenya, this is happening more rapid, where a lot of people's houses are being taken by either the government or other rebellious groups around. So what happens is the people put their land on the blockchain, where it helps with fighting any dictatorship that comes through, to show that, listen, this asset is already authenticated. No matter what your system says, it is on an immutable blockchain. So what your system says cannot be real compared to what my system is saying, where based on the timestamp. That's one of the main things with land grabbing. You can put the asset on the blockchain and play around with it. So cryptocurrency in 2020. Right now, Bitcoin passed its all-time high. I think it was this morning, which would be you guys' night, last night, what was about 33,000 US dollars. Cryptocurrency market cap is about 841 billion US dollars right now, with over 1,000 cryptos in the market. The year of 2020 has been the year of institutional investors, and I think for the next few years it will continue being the year of institutional investors, because you got major companies like Grayscale, MicroStrategy, Square buying up big amounts of cryptocurrency, not just Bitcoin. Grayscale just bought on 31st December $280 million worth of Ripple, and they've just been buying up a lot of cryptocurrencies outside, like Bitcoin, Ethereum, Bitcoin Cash, Litecoin, Ripple, everything. A lot of cryptocurrencies that are solving traditional problems, Grayscale is looking to buy it. MicroStrategy is buying it. All these companies have put it on their on the balance sheet. That's exactly what they've done. They've put it on their balance sheet, and they said that this is a publicly declared asset for their company. That is a huge thing for cryptocurrency. Another main thing is businesses started to accept Bitcoin as form of payment now. A lot of businesses, just to name a few: PayPal, Microsoft, Burger King, KFC, Starbucks, Subway, just a few to name. And recently, one of the first things that have happened from a long time, first major league player, NFL, to get paid in Bitcoin, Russell Okung. What happened was he negotiated part of his contract to be paid out in cryptocurrency, which mainly is Bitcoin, and the other part of the contract will be paid out in cash. So this is one of the first combinations of adoption of cryptocurrency into the big leagues, pretty much. So I'll just give you a little bit of ourselves. My name is Rehan. Myself, as I had mentioned, my Rehan Vakil, and my partner here is Zishan Vakil. I have a degree in criminology, a minor in sociology. We have experience in building and managing 4 mining facilities in Vancouver, BC. I am a private investigator from the Justice Institute of BC here, digital crypto investigator from McAfee Institute, and I have an associate's degree in criminology as well. My partner here is automotive engineering, a Red Seal mechanic, certified in all of Canada. He as well has experience in building and managing 4 mining facilities in Vancouver, certified in Bitcoin economics by BlockGeeks, project coordinator, and he has a diploma in business finance as well. So our company, Galaxy Crypto Consulting, is established in Vancouver, BC. Our idea and goal is to bridge individuals, businesses into the crypto space and facilitate crypto adoption for everyone. We seek to educate and empower individuals, and we specialize in security techniques, as well as we build and manage facilities. Our services are consulting sessions and mining consulting sessions, but they're not. It's much more than that as well. We do all types of discussions, helping with recovering keys, recovering wallets, all types of stuff. So we start off with explaining Bitcoin economics, safety, security, storage techniques, and regulations, because it's important in this space that even though it's unregulated, it's important to stay within the regulations of what the current country is saying or the current land of the law is saying. Whereas in Vancouver or in Canada, Canada is pretty lenient with cryptocurrency, so mining is legal here. We are able to buy and sell cryptocurrencies freely without any limitations. But the only thing is that Canada says is that when you do cash out your cryptocurrency, you pay capital gains tax on those amount that you have made. That's all Canada has been considering for now. With regards to mining, when we are sitting down for mining consultations, we help individuals understand the concept of mining, understand ratios, the risk assessment, we budget, strategizing on budgets, and we do executions as well. With our company, we strive to build a trusted relationship. So we are authorized resellers of the 2 major crypto wallets in the space, Ballet Wallet and Ledger Wallet. We have also created trusted relations with brokers and areas of ATM. So where we have the best rates that we get, so we can and there's not a lot of ID required. Depends on how much you buy with our clients and depends on their needs. These are very important in this. Just to show a few experiences of ours, we were invited to a crypto mining conference in Vancouver, BC, and we ended up becoming a winner of one of the wallets, one of the digital wallets that was coming out to be a credit card. And as you can see, we can put some color on the picture. The second one was where we introduced we introduced another family to crypto using safe and storage techniques. And we were invited to an ATM conference out in Vancouver, BC as well, where they introduced the idea of converting cryptocurrency to gold, and you would get gold out of the ATM instead of cash. We also seek to empower, so we were invited to the world's first ASIC manufacturing company, Bitmain China, in Beijing, China. And this is responsible for the facility that we have built out in Vancouver, BC on the right. The same machines there have been produced by this company, Bitmain, and they have been keep producing all types of Bitcoin machines, Ethereum mining machines, and so on and so forth. And just like to play a quick video of what we are doing and what we have done. So as you guys can see, this is one of the projects that we have already built and we are currently managing right now. It's a CCAN, it's a container where the machines are just stored in there, and they have had the power, and they've fabricated custom fabrication for the ventilation and everything. And yeah, just on a quick note, we don't facilitate investment transactions. We ideally create the environment where the individual or the business can facilitate their investment transactions themselves. So we show them the entire scope, and they themselves move whenever they feel comfortable. And we would like to thank you all for giving us the opportunity to speak in front of you all. And it's great that all you guys are interested in this up and coming space, because it does help a lot with as many new people getting involved, understanding it creates more adoption. There's a lot of limitless possibilities with this space. I'd like to thank you all. Thank you, Mahesh sir, again for everything. And we'd like to go ahead with the questions.
Yeah. Thank you, Rehan and Zishan. And we are open for questions. I just want to thank both of you, because for the last few days, in spite of the New Year's Eve, in spite of 31st December, I was troubling them all the time with my feedback on the presentation. I remember it was, I think, 10:30 or 11:30 in the morning over here, which was, I think, midnight New Year's Eve. And I sent a email, I sent a WhatsApp to Rehan, and within a few minutes, he just responded back. I was pleasantly surprised to find somebody on New Year's Eve, responding to me. So, okay, guys.
It was okay.
Any questions? Any questions? I think
Yeah.
Vivek had questions, right? Yeah.
Yes.
Go on.
So, sir, please pardon me if my questions sound too basic. I am just new to this thing.
Yeah.
So, when you said that a block has to be created within 10 minutes,
Yes.
and as 200,000 blocks are created, the reward goes down. So, and you said the hard complexity level increases.
Yes.
So is there a possibility that the block is not created within 10 minutes, or what happens if there is not much computing power available to make a block in 10 minutes? What would happen?
Oh, so essentially what happens is, one of the slides I mentioned said that there were about 10,000 plus nodes. These are the known miners, let's say, who are mining. So there is no question of a block not getting created within 10 minutes, because the way, see, it's actually like a race. In fact, the reverse happens. You know, the miner who wins the competition. See, when I said it's a competition where you have to create a certain number of zeros, you know, there is a technical term which is used for this, which is called nonce, Nonce. So the nonce is essentially a value which is told to the miners that, look, now, okay, this block has been created, and now the next block that you have to create, you have to do it again within 10 minutes, but for this block you need a certain number of zeros. So the way it happens is that, let's see how it goes gradually. I am a miner, you know, Rehan showed you the mining facilities. So I start, you know, it's 9:22, 9:32 right now. I look at the network, I say, okay, fine, let me start building my transactions. So I am connected to a network of computers, you know, to network of Bitcoin computers. I start collecting all the transactions which are coming to me. I start writing them on the block. Okay, and immediately I start participating in the competition. I use what is called as my hashing power. You know, I use these you know, the Bitmain equipment which Rehan showed you. Those are ASIC. ASIC is application specific integrated chips. These are specialized mining Bitcoin mining hardware, which starts generating these hashes. What is a hash? A hash is essentially the race to find that value, which is a certain number of zeros. And you know, in mathematical terms, in probability terms, it is essentially, you know, it is an exponential race. So what happens is, the minute somebody is able to find that I have already collected my block with transactions, I have already fingerprinted them, I already have created the, you know, the data, and I have found the block. I have found that number. The number, with the minute I find the number, I start publicizing that number to the entire network. So the minute somebody sees that, okay, look, the block has already been created. So the software, you know, the Bitcoin software, which is running on all the miner nodes, running on every computer in the network, says, okay, fine, you know, they themselves do validation of the block. And the minute they say, oh my God, the block has already been created, so let's stop our mining efforts, and then the race begins to start a new block. See, what happens is that, actually, practically, you know, the chain which is there, every day, every 10 minutes, you know, actually a fork gets created. A fork is as a split in the chain. So you could have a miner, let's say Rehan is sitting in Vancouver, and he's created a block. He's created the next block. I am sitting in Mumbai, and I have also created the block. The minute I have created the block, and it is quite possible, because both of us are independently working of each other, within microseconds or milliseconds, you know, there is a difference at the time the block he creates and the block which I create. Okay, the minute people start seeing that I have created a block in Mumbai, you know, the computers which are close to me in Mumbai will probably start taking my block which I have already created and validated, and start building on that. So this is happening in real time. It's happening in a dynamic mode. So because it's happening in a dynamic mode, the entire network shifts. You know, there's this joke. You know, normally when we are standing in a line, right? We are standing in a line at a railway counter, and suddenly you see another counter opens. So there, you see the queue which is short over there. So we all run towards that, right? Here is the reverse. Here, the minute I see, I had the block had a block. You know, there was a block which got created, and I see that the other chain is becoming longer. So I as a miner immediately stop my efforts on creating a new block, and I start taking the existing newly block which was created by Rehan, and I start building my transactions. I start building a new block based on what Rehan has already generated recently. Have I answered your question?
Yes, sir. So to add on to this, just one more thing.
Yes.
Like you mentioned that when a block is created, there's a block reward which goes out to the miner.
Yes.
So supposedly, if I need to send, say, X number of Bitcoins to you,
Yes.
so as you said in the first slide, that in a block there are certain level of transactions which are posted.
Yes.
So this transaction of Bitcoin from me to you will be
Yes.
just a transaction, or
Yes.
or every transaction is a separate block. So I'm just trying to find out. So
So
even if
yeah,
I send one Bitcoin to you, would a
yeah.
block reward fee go to the miner?
Yeah. Everything happens on the ledger. Everything happens on the ledger. So you have a transaction, you want to send 1 Bitcoin to me. Okay. Your wallet, you will do it through your wallet. Your wallet will send out a message to the Bitcoin network saying that, hey, Vivek wants to send out 1 Bitcoin. Okay. And Vivek wants to pay, let's say 15 cents as a mining fee, or no, whatever amount as a mining fee. Now, supposing you are desperate to, let's say you are desperate to sell the Bitcoin. You say, no, I am willing to give $50 to the mining fee. The Bitcoin software will automatically move this to a miner who is willing to pick up your transaction. Okay. So what the miner does, the miner is just a collection agency. He's collecting all the transactions. He's checking that they are valid. He's checking that actually Vivek has got a Bitcoin which he claims to have to send it to me. And once he has checked that, how does he check it? He just goes on the ledger. The entire ledger, the entire blockchain network right from block 0 is available with him. So he does a search and says, yes, correct. Vivek has got Bitcoins. He's valid to send the Bitcoins. And all this is happening in milliseconds. Right? It's not happening it's literally happening instantaneously. He
Yes,
starts
sir.
building.
Actually,
Yeah.
my question was that is there a particular space in each block? So when is a new block created? So
Yes,
my
yes, yes.
transaction is
Okay,
recorded
okay.
on an existing.
Yeah. Okay. I think currently the space is about 2 MB or 8 MB. I'm not sure, but maybe Rehan can. So the physical hard disk space, I think of each block is about 2 MB, 2 megabytes. Okay.
Okay, so sir, if my transaction say if an existing block has say 1.99 MB space currently, and
Yes.
say my transaction value is 0.1 MB,
Yes.
so post my transaction a separate block will be created.
See, your transaction will either go on the block, a block which is available. See, every miner also broadcast to the world, hey guys, I'm starting to build a block right now. Okay. So what the wallets do is they start sending transactions to this miner. Okay. So see, there are who are the stakeholders in this? There are miners who are running the Bitcoin software, and there are wallets. Wallets have the Bitcoin holdings in them, and this is all software. This is not, no individual is there. So the wallet says that okay, listen, I have to send out 1 Bitcoin. It will start hunting the Bitcoin network to see which are the miners which have got blocks available, or who have taken up the blocks for mining. If it is sent to Rehan, but he's already mined a block, and there's another block, let's say in South Africa, another miner in South Africa which is mining, he will take the block. Your transaction will go to that block. There is no geographical scope over here. Have you understood what I said? So it will go automatically to whichever block is available.
Okay, sir.
Mahesh, this concept of 10 minutes, I'm not very clear. Is it 10 minutes you're telling us as a hypothetical, or 10 minutes is really that 10
No.
logic like 10 minutes?
See, the 10 minutes was the Bitcoin, the blockchain block generating network has got multiple parameters. Okay, what are the parameters could be? See, like Rayan mentioned, today the price is all time high, $33,000, right? So there are people who say, let me get out of it. Okay, so guys start selling. So number of sell transactions which are happening. Number two is suddenly there is, let's say, a major power cut in a large part of China, or a major flood is happening, and the mining capacity goes down for whatever reason. Suddenly, as we saw 3 weeks back, there was a major outage, there was an internet outage and Google went out of business. So some part of the internet infrastructure goes down all over the world. So what happens is the blockchain network is automatically keeping a track of all what is the mining capacity available, what are the transactions available. But the way the algorithm is written, it's written in C++. The way the algorithm is written is every 10 minutes, a block will get created. So if it finds that, the mining capacity has gone down, so what it will do is it will slightly lower the difficulty level. Instead of saying 20 zeros, you'll say, okay, guys, now I'm making it 18 zeros. See, the examples which people give is a Sudoku puzzle. I have not worked on Sudoku, so I don't know how to do it. But people say, let's say you are in a room of people and you're trying to solve a Sudoku puzzle, and everybody says the guy who does it in 5 minutes will get a prize. Suddenly one guy gets up and says, I've done it in 5 minutes. So what happens is you say, okay, fine. Now I'm adding, more rows and more columns. So this is all happening in a very dynamic real-time mode. And the 10 minutes which is there, see, It's not a time deadline which is set in 10 minutes. It's a deadline which is set in the software capability, which roughly works out to 10 minutes. It may be slightly more, it may be slightly less. But if you want, Subhajit, I can send you more technical details on this.
Yeah, yeah.
I'll do that. I'll do that.
Another very classic question everybody has on their mind is when Nakamoto invented
Yes.
blockchains, this maximum of 21 million, right?
Yes. Yes.
That's everywhere else. What will happen after that?
See, that will come in the year 2140. So none of us will be alive by that time. Okay. So we are talking of 120, 119 years down the line, number one.
And what's that concept? Why it was 21 million?
Because if you see the 2008 crisis, or if you see what happened in India in 2016, I'm just sharing something with you because there are no journalists over here. When I met Andreas, I'll come back to your point. When I met Andreas Antonopoulos in Singapore, I told him about Aadhaar. Because see, let's understand one thing. India is way ahead of other countries because of our Aadhaar system. See, what is Bitcoin trying to solve? What is the problem Bitcoin trying to solve? Bitcoin is trying to solve the problem of trust between individuals who do not know each other. Because I do not trust you, I do not know you. So I don't know whether if I send you a digital good, if I send you a file, whether you'll pay me money or not. So in India, we have this system of Aadhaar, which is a digital identity. In fact, I had suggested to the Ministry of Finance and even IBM that, why don't you tell the government of India that for every Indian player, every Indian person who is participating in blockchain, like today, what is happening? Today, if you want to buy or sell Bitcoin in India, you have to go to an exchange. Exchange does your KYC. They will take your Aadhaar, they will take your PAN number, whatever. So I suggested to them that let's do one thing. Let's put Aadhaar number on the blockchain. So everybody who's an Indian player, Indian investor, the exchange should say, okay, fine, I will do your transaction, but your Aadhaar details will come on the blockchain. Okay, but obviously, I mean, I'm not sure whether they will accept it. So the point is that 2008 crisis led to people losing faith in money. Okay, today, why is gold so popular? I had gone with somebody to Zaveri Bazaar 3-4 weeks back. A relative of mine wanted to sell a piece of jewelry. I was shocked. Within a span of 3 hours, I got rates from 80,000 rupees for the jewelry to 1,40,000 rupees. So I was telling my wife, how the hell do people invest in gold when there is no surety on the quality of gold? You have big brand names giving you rates of 80,000 to 1 lakh, whatever, within a matter of few hours. So the point is that Bitcoin was designed to be anti-inflationary. So what is happening is, because the supply of Bitcoins is limited, nobody can change it. I cannot say tomorrow I am going to start my Mahesh Bitcoin network and I will mine unlimited Bitcoins. I can do that, but I'll be the only player on the network. Nobody else will be there. So Bitcoin by nature is anti-inflationary. Okay. And so that is the reason why there is a limited supply of coins which is there. And it is not that somebody will decide 2140, let's shut down all the computers. The software automatically does this. So, the minute today, I think the transaction fees are, the miner fees are 6.25 per block. Sometime down the line, it will become 3.25 and it will not be a switch. The software from that point onwards will start giving the miner 3.25. So to answer your long question, I mean, to a long answer, but it is designed to be anti-inflationary.
Yeah. So that's
Mahesh,
yes.
thanks. Just responding to what you said, my best wishes that all of us, the elder guru, that is you, and the younger gurus, Rehan and Jishan, are alive after 20 years and participating in such seminars. Point number one.
Thanks.
Okay. Very, very nicely done by all three of you. My one question I had was, actually I had two questions, if you permit me. One was the difference between this Ethereum and Bitcoin,
yes,
as such. And the second one was, at this age, I'm reading stuff like cosmology and physics and all, and it's giving me a lot of pleasure in terms of self-actualization, but which this particular session did. Is it going to help me also in terms of money? Because at 62, I just started now thinking about money.
Yes.
Is it going to help me make some money? Thanks.
Two questions on the Ethereum and Bitcoin. Rehan, you want to take it up or should I address it?
Yeah, no problem. See, Ethereum, you could think of Ethereum as an internet, where Ethereum, you link to this internet, there's all types of areas you can go on the internet to solve different problems. So Ethereum, you could look at it as an internet, but Bitcoin, you could look at it as an email, where you would only be able to send and receive, because Bitcoin can only do so much, but Ethereum does even more. So the main difference is Bitcoin is the first cryptocurrency that solved the double spending problem. So without Bitcoin, there would be no cryptocurrency. Without Bitcoin's white paper, there would be no blockchain solving methods. So what would happen is, without Bitcoin, Ethereum is not there. So Bitcoin allowed Ethereum to, you know how what happens is when someone does something first, there's always an inventor or an innovator behind them that will do it better using a different technology to solve a different issue. That's exactly what Ethereum did. Ethereum said, we will give people the entire platform. They can choose how they solve which problem. But the matter of fact is the platform is there and is being used. So that's how we
Yeah.
perceive the main difference.
Ravi, I'll just add on to
Yeah.
what Rehan said. See, he spoke of something called as smart contracts. Okay. Now, what are exactly smart contracts? Smart contracts are it's also called as programmable money. Okay. So the first thing, this first difference is that Ethereum network has been set up to widen the scope of a blockchain technology beyond just money. It's essentially, we are talking about, we are talking about consensus based driven. So smart contracts are essentially mechanism which is built into the Ethereum network to automatically facilitate transactions, or things which are happening without the involvement of people getting in. Number one. Number two, it uses a currency called as Ether, ETHER. So you essentially, what you do is you can buy Ether. I can buy Ether worth $100, and I use that Ether as a gas, as a fuel to do a transaction. See, the limitation that happened with Bitcoin was because it was 2000, started in 2008. So today we are in 2020. 12 years have passed. Enormous technology changes have taken place. But unfortunately or fortunately, the entire Bitcoin software which I mentioned, which was written in C++, has remained the same. So today, as I mentioned, if I download the blockchain into my computer, and in every software has bugs. So that software had bugs in 2008. So today, if I have to rerun the entire blockchain network on my computer, because I have to ensure that the blockchain network, or not the Bitcoin software ensures that the blockchain network cannot be changed. When my software runs, it will find the same bugs which were found, let's say in 2009. It will, so it will process the transactions in the same fashion. So Ethereum has been positioned as a network. In fact, the gentleman whose name I mentioned, Vitalik Buterin, he is one of the world's most genius guys. I think he's the world's 25 under 25 kind of a guy, very humble, down to earth guy. And he proposed this idea, and he said that why not extend the technology of blockchain into all kinds of assets. So smart contracts, the slide which Rehan mentioned,
Yeah.
talks about the concept of programming of money, automatic programming of consensus based rules. See, let me also warn you that Ethereum, so far, even though it is the second most popular network, there have been technology hacks, there have been hacks which have happened with Ethereum. So in fact, just to share with you, last night, me and Rehan and Zishan, we had a conference call, and I requested them whether they wanted to put smart contracts. They convinced me, no, sir, we'll put it, because see, my knowledge on smart contracts is not as high as their knowledge. To answer your second question, as far as investments, I think today it is the most fundamental problem which is facing all of us today. I mean, and I'm talking of, there are two sets of people. One is, let's say, we in India. Today, which investment in India gives me certain returns. My fixed deposit, which is supposed to be the safest, gives me 5-6% a year. Stocks are crazily priced. I mean, the kind of mania which we are witnessing in stocks today. I am very happy. I read 2-3 days back that the government is thinking of putting in 18% duties on Bitcoin. I'm very happy, because what will happen is, at least if the government starts putting duties on Bitcoin, it will legitimize the investment. You know, so today if you see Bitcoin only as an investment class, and you can do it only after you understood that the technology and you understood that it cannot be hacked into. There are people who are, I mean, there are guys like Raul Paul, who's a very huge, he's put $400 million in Bitcoin. There are these two twin brothers who were the inventors of Facebook. They have put up, they have, they have moved huge. See, what is their logic? Their logic is very simple. Today Bitcoin is what, 800 $900 billion, what Rehan mentioned. Gold, the market cap of gold is about $6 trillion. They say even if Bitcoin can get 15-20% of the gold market cap, there are people who are giving estimates of $500,000 $1 million. Okay, so the point is that, but see, all these figures are very good because Bitcoin is an extremely volatile asset. So what I suggest to people is, in people who are in India, I am still unclear on how we go about the investment and all, because the government is thinking of putting in GST. There is also the income tax department who's talking about treating it either as income from other sources or treating it as capital gains. So till the regulatory environment in India becomes a little clear, which I expect will happen probably this year, then it could emerge as an investment asset class, which is essentially inflation proof, but with high volatility and a very limited amount, a SIP or whatever, maybe if you can invest, if I can throw away, I have this concept of investing called as 5-star meal investing. I own about 150 stocks. And what I do is, in any stock, every investment that I've made has not been more than 10,000-15,000 rupees at one time. What is my philosophy? My philosophy is, if I go to a 5-star hotel with a meal with my family of 4, I'll spend 15,000 rupees, right? Or maybe 10,000 rupees. Tomorrow, if the food doesn't suit me or my family, I'll probably vomit the next day. I'll have loose motion. Nothing happens to me. So every investment I make at a transaction level happens at the 5-star investment, 5, 10,000, 15,000. Same people I suggest who are in countries where Bitcoin is, like Singapore mein Bitcoin is clear. Canada mein it's clear. US mein there are still some issues which are there. Government is still looking at bringing in. I think Biden, one of his supporters is a pro Bitcoin, one of his supporters is anti Bitcoin. So I will suggest, my first suggestion would be, understand the technology, understand what can go wrong, and then start putting small amounts of money, because the world has never seen an asset class like this. An asset class which today big macro investors are calling it as digital gold 2.0 and all. I mean, I can share with you guys if you're interested. There's an entire 18-minute video presentation given by some of these people like Bill Gates. See, on the other side, just to give an example, one more, since we're talking about investments, Warren Buffett, who the world reveres, he talks about Bitcoin as rat poison squared. He says it basically doesn't have any utility value. Now, I'm sorry to say, but I have disagreed with many of my friends who praise Warren Buffett's investing style. I mean, look at some of the investments he's made with, let's say, IBM. IBM was a dud for him. He got into Apple, pretty late. So the point is that people who are uncomfortable with the old way of living do not find Bitcoin a palatable, investment to look at. So my suggestion to you would be, spend time understanding the technology. Once you are convinced that yes, this has got potential, then start dipping fingers into it, start doing whatever into it, and then see how it goes. I'm being very frank. I do not have the regulatory knowledge as on today for India, because as you know, in India there was a Supreme Court judgment which came, I think, in the month of March, which has allowed Bitcoin, to Bitcoin exchanges to flourish once again. But knowing the Indian government, you never know how it, if you could disable the entire currency of a country, in 4 hours, you never know, tomorrow they may shut down the exchanges. So one has to be very careful in that sense. Have I answered your question, Ravi?
Yeah. Thanks, Mahesh and Rehan, both. Very nice. Thank you.
Yeah. Any questions? I think there was some questions.
Yeah, hi. Sir, I had this question, actually a couple of questions.
Yes.
If I compare this to, say, a bank's processing speed,
Yes.
like you mentioned, this 10-minute for which I have to wait for the blocks to stabilize and the transactions to be validated.
Yes.
How do I see comparing it to, the the kind of processing speed that banks have if we actually want to move to decentralization. And
So,
secondly, the
yeah.
sorry,
No,
secondly the
yeah, please say, yeah.
secondly the mining fee that you mentioned, I'm
Yeah.
slightly confused. Does that have to go from the pocket of a Bitcoin wallet? In which case, also, how does it compare to a transaction processing fee of a bank, which is being done these days?
Okay, two questions. Currently, the Bitcoin network is very slow. I will share across some details of how slow it is as compared to, let's say, Visa or Mastercard. Okay, but what is happening is there is an important technology which is being developed over Bitcoin. You know, the concept is something like this. If I know Samarpita very well, right, I need not put all the entries on the ledger. Let's say we are friends. We start, so today both of us go out, or we go in a group. I spend the money and you say, okay, Mahesh, I know you spent 100 rupees last time. We go next out somewhere else, again, you spent 100 rupees. So what we do is we settle these transactions amongst ourselves without going on the ledger. So there is something called as a lightning network. I will share the details of that. A lightning network is a protocol which is being built on Bitcoin, which essentially says that for small transactions, these coffee transactions or these subway transactions, we need not overload the blockchain network. We can settle it amongst ourselves. So for instance, again saying what I spoke earlier about Aadhaar. Supposing I tell Samarpita, share me your Aadhaar, and you have my Aadhaar. So between the two of us, on top of the blockchain network, on top of the Bitcoin network, we build a layer which is only specific to India, and which only settles the transactions between both of us, which get validated with UDI. UDI does the Aadhaar validation, which says yes, Samarpita's Aadhaar number is what Samarpita claims to be. Mahesh Khatri's Aadhaar number is what he claims to be. So all these small transactions which will get settled in the Lightning network, which will be built on top of Bitcoin. Number one. So as far as the speed is concerned, yes, today it is very slow. I think the orders of magnitude are far higher. I think, if I'm not correct, Visa can do about 2,000 transactions a second, whereas Bitcoin is very slow. I'll revert back to you with the speed comparison later on. The second point that you mentioned about the mining fees, look at the mining fees in this respect. I spoke about the private key. Remember, I said the private key is the
Yes.
grandfather. Now, what is the
Yeah.
private key? The private key for me can just be 10 or 12 word phrases. I did not remember the number. So I can have a word phrase saying that I participated in a Bitcoin blockchain training session on 3rd January 2021 from 8 a.m. to 10 a.m. Right? These are, let's say, 12, 13 phrases. The Bitcoin software can generate a private key based on this. So I just remember this phrase. Okay. I walk out of customs. I walk out of Mumbai customs. A friend of mine, she's a widow. She came back from Dubai the other day. Her son stays in Dubai. And for 2 hours, she was harassed by a lady customs officer who insisted that my friend was, she was carrying some gold with her. And because she's a frequent, visitor to Dubai. And the worst part was, she said that customs inspector came and, spoke to me without any PPE mask and all. I was getting very scared. So what is the point? The point is that today I can carry $1 billion of Bitcoin into any country in the world by just memorizing those 10, 12 phrases in my mind. I can fly from here to Rehan's office in Vancouver. I can say, Rehan, this is my wallet. Just please set up my wallet. He'll say, okay, uncle, please tell your seed phrase. I'll speak out the seed phrase into the wallet, and the wallet will generate will recognize that it is me, and it will show me all the Bitcoin value that I have on the wallet itself. So that is a huge advantage. When we talk about anonymity and privacy, it's a huge advantage. Number one. Number two, as regards the fees are concerned, I think certain fees are much cheaper, and more than the fees, it is the time. Today I believe certain countries, depending on your KYC or non KYC, they still take about 4 to 7 days to process cross-border transactions. See, all of us are very fortunate. We are very lucky. We are very educated. Bitcoin and blockchain can be the panacea for billions of people all over the world who can just transact using a simple mobile, on with using SMSs. So, but I'll revert back to you on the transaction fees also in terms of what are
Yeah,
the.
just I just like to mention with regards to the amount of transactions Bitcoin can do. See, this is what I was mentioning before, that when something new comes out, there's always innovators behind them who start doing it differently or much better. So Bitcoin cannot do so much transactions per second, but there's another cryptocurrency called Ripple that's doing transactions. And in fact, there's a few exchanges here in Vancouver, the money exchanges, money services, that they actually use Ripple software sitting on it. And you can send money from here to India, and then it's powered by Ripple software itself. So actually, certain parts of Ripple is beating Mastercard's transaction speeds. So there is cryptocurrencies that will come out with beating the speeds, but with regards to the transaction like payments, it really depends on how congested the blockchain is. If the blockchain is congested, it'll take longer, the fees might increase. It really depends on that. So there's a lot of adoption that needs to be involved, but when banks are getting involved, they get involved into different types of cryptocurrencies like Ripple. That's where they're doing much faster transactions than MasterCard. So that's what I just wanted to
Yeah. And Samarpita, just to add to what Rehan said, see, as he mentioned, an important thing which has happened this year is a lot of Wall Street institutional players have got into Bitcoin. Now, why have they done that? Because you recollect what I said earlier. Today, there are individuals in the US whom I interact with. They are extremely desperate. They say you don't realize the amount of money an average American has invested in the stock market. They see no opportunities for growth. So today, I was hearing the interview of the chief of PayPal. Now, PayPal is one of the largest networks in the world. He says what we are doing is they have got into crypto in a very big way, and they are saying we are working with the New York state regulator, because I think PayPal is headquartered there, every step of the way, because we need to make sure that we do nothing wrong as regards the regulations. So what is PayPal doing? PayPal is saying, look, you want to buy something on PayPal, use your crypto. We will charge you a very small transaction fee, but look at the convenience. Today, if I have Bitcoins, I wish I had them, I don't have. But if you have a Bitcoin and you can buy whatever you want, wherever you want. So you are willing to pay that extra cost of, of
Yeah.
being able to do that. And the second example I told you was I said about these the creators. What they done is they have set up an exchange called, I think, Gemini it's called, and they said we deliberately chose the toughest investment banking or license that is applicable, and we went in for that deliberately because we want to satisfy the people as well as our investors, that we know we are willing to work with the regulators and we are safe. So this is what so uh, this is, I think, so it's going ahead is what I can see. Yeah,
Sure. Thanks so much, sir. Thank
thanks.
Mahesh sir, Vivek here.
Yes,
Sir, the recent SEC lawsuit against the Ripple network or Ripple currency,
yes.
do you foresee any adverse impact on it on other currencies as well, or can you just shed some light on that? Like what went wrong
Yeah.
and
Yeah. See, unfortunately, I don't have much information on the Ripple part of it, but I believe there was a technical, understanding, because see, one of the things about which regulators find it hard to understand is how do you classify Bitcoin? Is it an asset? Is it a commodity? So I think what Ripple was trying to do was they were saying that it is not a security. So that is the cause of the lawsuit, and maybe you can add on it. The second issue you need to understand is, let's understand one thing. On the Bitcoin network, even though I said that it is anonymous and there are all your addresses are visible. Today, who is the largest holder of Bitcoin? One of the largest holders of Bitcoin in the world. It's a US Fed government. The US Fed government has about, I think they are the fifth or sixth largest holders of Bitcoin. Last 3 years, almost all our customers have got hacked. We are an IT company, and almost every time, the hacker demands money in Bitcoin. So today, what you can do is you can approach the US Fed office whichever part of the US you are, and they will make sure that they will not return your money immediately, but they keep track of the addresses. See, these addresses, even though they are anonymous, unless that address, I meet somebody who wants to sell or buy Bitcoin from me, individual face to face whom I trust, I can, then transfer money to his address. But otherwise, if I have to transfer, if I have to transfer money from the Bitcoin network into real dollars, I have to go through an exchange. So if the exchange, in every exchange will have your KYC. So ultimately, when the money comes into the real world, you will have a trace that you are leaving, which is what actually, unfortunately, 3 years back when we had this problem in India where they stopped all these Bitcoin transactions, I was trying to convince the government that, look, there is a huge, don't look at the scary part of it. Today with money, I can bribe somebody with money. I can, a butcher can use the same knife to kill, the surgeon can use the same knife to repair, to heal. So the issue is not the technology per se, but what you can do is, because India, because it's a technology innovation, we could become the cryptocurrency capital of the world by sheer virtue. We have 10 million software developers in India. I think there are almost 1 or 2 million software developers who are doing work. Imagine the impact. I've spent almost 3 decades in my company handling regulatory authorities. In Maharashtra, we have these VAT authorities. In the VAT Mazgaon Bhavan, there are 6 agencies who ask you for the same information. If you every 2 to 3 years, you will get a notice from a different agency. There is a surveillance wing. There is a surveillance wing which is looking after the surveillance. It's crazy. Service tax, service tax got retired after GST came into India. Last 3 months, I've got notices of some service tax issues where they have not bothered to steal my accounts. And so the whole point, what I'm trying to say is that if all these transactions are on the blockchain, see, today when I'm digitally signing my accounts, it is there on the blockchain. The government can say, the income tax inspector can say, look, yes, it is correct, and that record should be available to everybody. So the regulators, they will see that you will have problems like what has happened in Ripple. You will have problems coming up, but I think it's a matter of time. At about 2 decades back, when an income tax inspector came into my office and he saw my computer, he said, "TV चालू करो, match चल रहा है." I said, "Sir, ये computer नहीं है, ये TV नहीं है, ये computer है." Their understanding of technology was not there. Today, I mean, whenever I've been to the government offices, some of these guys are very smart. They are young, they are very smart. So I expect the government to do it because we need to create jobs, and cryptocurrency is a great place where we can create more jobs. Yeah, I think there were some questions which were there.
Yeah, Mahesh, can I?
Yes, Varsha, yes, please.
Yeah, anyway, first, thanks a lot, Mahesh and Rehan and Ishan. I hope I got the names right.
Ishan, yeah.
Yeah. So, my question is really more on understanding how Bitcoin can become more commercial, mainstream.
Yeah.
And so when a company like Starbucks, right, starts accepting Bitcoins as payments,
Yes.
is there just a corporate policy and a mindset change, and or do they have to make investments? Because see, the way it is moving, right? First, these currencies were accepted for payments for drugs and stuff like that. Then slowly they're getting corporate mainstream acceptance.
Right.
So what does it, what is the kind of evolution that a corporate has to go through? Because I think then the commercial acceptance will push the regulatory acceptance also. So if Rehan and, has some experience as to how corporates are thinking on this, or is it just securities that is the main concern with them today?
With regards to your question about Starbucks, see, the thing is, they're just using a software. So what happens is, let's say you have a company and you would just have a software where it would convert the Bitcoin to your traditional currency, where you're staying either rupees, Canadian dollars, and will put it back into your account. Currently, that's the main thing. That's what's happening. If companies are accepting Bitcoin, what's happening is they have the software and they have an artificial intelligence technology sitting on the software. It would, if I buy your service for 1 Bitcoin, for example, what would happen is I would transact with you regular with cryptocurrency, but the moment it hits your system, the artificial intelligence would start to kick in, and they would look at all the exchanges and find the best rate, convert it, and put it back to your regular account as a traditional transaction. Because what's happening is, on the corporate side, when you do move your things to Bitcoin, no country is considering Bitcoin as a legal tender currently.
That's right.
So what happens is, this is why a lot of people, when they hack and they steal, they ask for Bitcoin, because when they do get convicted, or they do get caught or convicted, there is no obligation upon them to return you the Bitcoin. But if they get caught and convicted with $100,000 of yours in cash, then there is an obligation from the government to tell them, because the cash is considered a legal tender. That's number one, why truly attacks come in more of cryptocurrency and Bitcoin. But with corporate policy, when accepting Bitcoin, you have the taxes that are involved. So if you're transacting with cryptocurrency, you're showing less tax paying, with your transactions decreasing with traditional currency. So what happens is, now the software actually, with currently how they're adopting software, allows you to convert your cryptocurrency into your traditional system, so it keeps up your payments, or it increases your balance within their company. But ideally, you do not, you yourself, the corporate company, they can choose to go and invest in cryptocurrency. That's up to them. But if they're accepting cryptocurrency, ideally they're not holding it as a asset on them for what Starbucks is doing, or Subway is doing, or KFC is doing. These companies right now, they're not completely accepting it as in an asset. They're accepting it as a payment, as a form of payment. That's what it is.
Okay.
I hope I answered your question. I don't know.
Varsha,
Yeah.
okay, you also asked before you said, how do you see regulations evolving? Number one, see, there are two parts to it. One is, as a business, if my customers are asking for it, and number two, whether the regulators allow it or not. Okay, so that is one part. So what I'll just add to what I said earlier, when somebody sent me a note that day that Bitcoin is being considered taxed at 18%, I said, thank God, at least they're not taxing it at 28%, which is where automobiles are tested. Actually, ideally, if you ask me, Bitcoin should be taxed at 2% or 2.5%, whatever rate the gold investments are taxed. So number one. Number two, the minute the government sees that they will get revenues out of this, they will start putting in regulations. Number one. Number two, as far as what you said about corporates accepting it, corporates will go by what their customers want. Like what PayPal CEO said. He said, today my customer says, look, I have got Bitcoin. Why don't you accept Bitcoin? Why are you forcing me to pay dollars? Third question that you asked is, as BTC is limited to your balance or limit, does it mean a credit score system is needed? No. I mean, this is completely automatic. If you have only one Bitcoin, you can spend only one Bitcoin. Your wallet software will not allow you to spend anything more. Okay, and is that clear? Okay.
Yeah, no, Mahesh, my question therefore is, going forward from, if I have one Bitcoin, I can spend only one Bitcoin, right?
Yes.
In the real world, if I have, say, 100 rupees on
Yes.
credit, I can spend more than 100 rupees.
Yes.
Right? Because I have a credit card, or I have a bank loan, right? Which requires a credit system.
Yes.
So my question is, going forward, and this is more, my understanding is that ultimately the value of a Bitcoin on a very fundamental level emerges from the value of a community,
Right.
Which is, the point is, if it is known in a community, and ultimately a credit system expands the system, the commercial system, right? So if, therefore, obviously not today, because it has hoops to grow, but is a credit score system and a credit system possible in a Bitcoin, maybe in the future?
Absolutely, because all the transactions, see, if I am willing to tell the government, okay, listen, government, these are all my Bitcoin addresses, and you please go and go. I don't even need to tell them the balance. The income tax ITO will just go and check my Bitcoin addresses. He says, okay, as on today, your Bitcoin value is, let's say $4,000. Or sorry, you got, let's say, 1,000 Bitcoins. Each Bitcoin value is $33,000 or whatever. So this is your capital as of now. It is see, that's the best part of it. The entire technology stack is open to anybody to see, number one. And on the part of it, see, it involves a lot of, as you mentioned, in India we have the RBI, we have SEBI, because they don't understand, is it a currency? Then should RBI regulate it? Is it an investment? So SEBI should regulate it. It's crazy. I mean, the kind of, so we need to first have harmonization of the understanding of what the asset class is. Actually, I've written a Medium article on, when this PMC crisis happened, this Pune Mercantile Corporate
Yeah,
Bank.
yeah.
Oh, I mean, it is crazy. I mean, what did those people do? What did Harshad Mehta do in the Harshad Mehta scam? He falsified the ledger, the State Bank of India.
Correct.
So today, even if the governments can, can put in, make sure that they start using blockchain. Forget Bitcoin. First, you start using blockchain for your own internal record keeping, and you see the scams will disappear. How much time today does it take for me to see a company's financials if they are available on the blockchain? Okay. So yeah,
Another thing with this, you're still right now currently with the current how things are going in the crypto space. I can go today and take out a crypto loan, but it would depend on my balance, like Mahesh sir just said. Right now, it's only on the exchanges, but these are depends on the exchanges. It could be a decentralized exchange, it could be a centralized exchange. But the loan is given out on how often you are trading and what's your balance on the trading. And they look at, like, let's say within a year, how much you have traded, how much cryptocurrency you own. And then from that, they give you a crypto loan out of that. That's how it's done.
Got it. So tell me, fundamentally, sorry, this is my last question, right? See, most, as to why, when I think as to why RBI and our regulators globally are not accepting the cryptocurrencies, people are mentally used to, I mean, what I mean is the regulators. First, there was a gold standard, right? And then now there is this whole system of everything being pegged to the dollar. And then a country's monetary system is linked to the monetary policies, right? But a Bitcoin as such is not really linked. I keep hearing that it is anti-inflationary, but it is not really linked. I mean, it can get created, right? In their mind.
I'll interrupt you here. See, when Warren Buffett says it is rat poison squared, rat poison multiplied by rat poison, what? See, he doesn't understand. When I say, every 10 minutes, there is a race to generate the next block. You and I cannot generate blocks. You need, there's tremendous amount of mathematics which goes into it, tremendous amount of computer science which goes into it, and it's really an iterative process. So there is, I mean, see, the consensus algorithm, what I mentioned, it's what is called in Bitcoin, it's called proof of work. So you can actually estimate when this block was created, what is the proof of work which has gone into it, how many billions of hashes, how many computing transactions have actually happened. So it's not as easy as somebody wanting to say, I want to generate Bitcoins starting from tomorrow. So there is serious computing effort. See, that is also one of the criticisms, because a lot of people say, look, we are in an era of climate change and you have this stupid Bitcoin network today, which is the largest supercomputer in the world, which is generating out nothing actually. Because see, what happens when any block is created, there are new Bitcoins which enter the system. The block reward which is there, that $3.25 or $6.25, that is a new currency. Now tell me one thing, you spoke of gold standard. Richard Nixon, when he was the US president, I think somewhere in the 60s, decided that, look, we are the superpower of the world and we are not going to follow the gold standard at all. Did anybody stop him?
No.
Why? Why? Because today he's holding a gun. Today China is desperately trying to come out with their own, they are trying to make their own currency through the digital means. They are coming out with what is called as CBDCs, central bank digital currencies. China is trying desperately hard, to make sure that their digital currencies get accepted. Facebook has a project called Libra, and in fact, Facebook is also one of the strong contenders, because today Facebook, everybody uses Facebook. So the point I'm trying to tell you is, at the end of the day, it is trust. I trust you. You stay 2 buildings away from me, and I know that there are certain limits that you and I will never cross. But how do you trust a stranger? So what Bitcoin has done is, it has effectively used mathematics, computing, real time smart incentive system to to substitute the role of a central bank. When Narendra Modi ji comes and says in 4 hours, 100 rupees or 500 rupees ke note chale jayenge, it is shocking. Andreas Antonopoulos, the minute Narendra Modi did this decision, next day all over the world, he quoted that example. Look, this is what India has done, and India, by the way, is a very significant player in terms of Bitcoin transactions even today. So the whole point is the trust of today my fixed deposit in the best banks in India, Punjab National Banks, gives me 5.25%. My inflation rate, official inflation rate is 8-9%. What do I do? Where do I park my money? All the all the 150 stocks I mentioned to you, almost 90% of them have from the March lows are today sitting at 30. I'm sitting on 30-40%. But are those returns are they actual returns unless I sell the stocks? So there are it's a complex issue. I'm not saying Bitcoin is the answer, but Bitcoin could be a possible answer on a SIP basis. In fact, Sampak had asked this question earlier on SIP. Can I do an SIP on this? And you have any thoughts on this, Rehan? SIP on systematic investment planning. What is the viability and what is the reliability and returns?
With this, I think it would be more regards to the regulation on the land. Like for example, here with the SIP here, what's going on is there's places where you could go and invest. Like there's certain banks that are coming out, or in life insurance policies that are coming out, where you could invest your money into a cryptocurrency fund, or it could have multiple currencies or Bitcoin. I think it just depends on the regulations that come out, and because here it depends on our banks and what they do. So for them, how they regulate it, how India's banks would regulate it, how Japan's banks would, it would all differ, right? Like I could invest in Bitcoin with another company, but why should I? I should just go buy the Bitcoin myself. Why should I invest with someone else and then look for returns if I'm the one holding it, right? So ideally for the returns aspect, like there's a company called Grayscale. They're doing this. So what happens in the United States, that Grayscale buys up all these Bitcoin, big cryptocurrencies, and then they give SIPs to other people, and they give small returns. But who's actually holding the real asset that's really truly valuable is Grayscale. You're not holding, you're just getting a percentage of the profits or whatever the deal has been made. But the idea is, I would suggest, is to actually truly looking to own the asset itself, own the digital asset. You don't need to buy one Bitcoin. You can buy is divisible up to 8 decibels. So you could buy $1, $2, $3, $4, $5, and it's not just, don't just think Bitcoin as an investment. There's the idea of mining gets it creates a self-sufficient entity where you could do so many things, like pay for orphanages, have things like nurseries, libraries built, schools built, just based off mining itself. So it really depends how you view it, how you understand the technology, where you learn it from. But there's a lot of ways to go around this space, and if you're looking for returns, I would suggest you just buy the asset yourself instead of looking to buy it off someone else.
Sampak, what I will do is I'll also try and share some reads on SIP. What have been the experiences of people on this, guys? I just want to take 1 minute and I want to show you an actual Bitcoin, the live Bitcoin blockchain, screen, so that you can get a flare of what I was saying. Just give me a minute because I wanted to do this earlier. So this is the actual blockchain live website right now. Okay, and you can see the price which is there, and on the left hand side this is the moment, and there is a mempool. Mempool is essentially, it is a parameter which is used to estimate what is the size of the size of the entire network. So if you see on top, you have the price, you have a hash rate, you have number of transactions volume. This is blockchain.com. So you can, I will also share the link. And these are the latest blocks which are there, which was mined. If you can see, the latest block had a height of, the number is 664241. And then you can see on the right hand side are the latest transactions. And you see, as I'm talking, the transactions are moving, the changes are happening. I can go and click on a particular link, I can go and see what is the, so yeah, so this is, sorry, 1 second. I'll go and click on that. Yeah. So if I go and click on the latest block, okay. So this is, so this is the block hash. Just notice the number of zeros which are there in the hash. Okay. Two confirmations. Two confirmations means that two people have built, or other miners have already built on this block, or they are building transactions on top of it. This is the timestamp. This is third 3/1 21 10 12. Then the height, miner is unknown, so people don't know who the miner is. Number of transactions. This is the difficulty. I spoke of the difficulty number. This is the difficulty number. This is a Merkle root is a technical term. Essentially, what Merkle root is, it is again a added layer of security. Every transaction on the blockchain gets added and a number is generated, which is called as a Merkle root. Okay. This is the size, the nonce. I spoke of the nonce, the transaction volume, the block reward, the fee reward, and then these are the actual block transactions which have happened. So you see on the left hand side that you see is your Coinbase. This is the miner's reward. Okay, so it roughly works to about 6.5 or whatever the Bitcoin fee is. Then there is a fee mentioned below. Okay. And then there are all these just left hand side. Don't worry about the numbers. These are just the person who has given and the person who has received. Okay, all these. I'm pointing my arrow. If you go on to this, these are all the people who have sent money and the people who have received the money.
Yeah, 63.
Any questions on this? Okay. Any more questions? I'll stop my screen share. Thank you all. Any other questions? Any other thoughts? Parting thoughts? Thank you for investing your time to more than 2 hours with us. And I'm sorry about the technical glitches which happened at the beginning.
I just want to
yes.
I just want to say one thing. I just want to show you guys one thing. So this is what a wallet looks like. It's the size of your credit card, and this is the transportability part of it. So what's happened is here now I can go to America from India or to London, and then arrive at London having no cash, no US dollar, only Bitcoin stored in this. Go to one of the coffee shops in London or the ATM machines in London, and then scan this QR code that you see here. Now this QR code means that I'm sending this Bitcoin from here. It's my public QR code. I'm sending Bitcoin from here to the ATM machine to cash out in euros or in dollars or in pounds or in whatever the currency is. So it's as simple as that. The portability is very simple. You can also load Bitcoins back into this and come into India and not say a single thing, not do anything. No one's going to question you. No one's going to ask you anything. And that's how it goes. Moment you have cash, certain countries like Canada, you have to declare any cash amount more than $10,000 when you're arriving in Canada itself. So if you do have more than $10,000, they're going to tax that at Canadian tax bracket here. But now you have more than $10,000 in Bitcoin. You just arrive here. Now you want to cash it out. You go to any ATM machine, scan this code, and receive your cash in Canadian dollars.
Just one quick clarification. Many of us may not be aware what a QR code is. A QR code essentially is a visual representation of the Bitcoin address. So essentially, today we go to a restaurant. In Mumbai also today when you go to a restaurant, many of them tell you, you want to see our menu just on your phone. And every mobile phone has a QR code reader. So you can just read that and it tells you what
you would just turn on your camera and then it would read this.
Yes.
Point at it and it would read it. And everything is stored digitally, so it automatically transacts with the blockchain itself. And transparent, it's very transparent, very secure. And that's the whole idea of this new technology that we are discussing here today. Thank you.
Okay, thank you. Thank you for all staying back till so late. And I just have a request. I'll be sharing the resources of the of what we discussed today. Unfortunately, there was some problem with the recording my part of the video. I have recorded Rehan's presentation because I was getting distracted earlier by all these interruptions which were happening. And what we will do is, if you guys are interested, we can have one more session little later, sometime in the later part of February, or after 15th February, where we could talk more on the investment part of Bitcoin. Practically what one could do, and how does one protect yourself? Because as Rehan said, the most important thing in this is your private key. There are people today who have lost millions of dollars in Bitcoin because they forgot their private key. They wrote it on a piece of paper. The piece of paper, those phrases, what I told you, 10, 12 phrases, those phrases was, eaten up by the dog. It got lost somewhere, and it was essentially, we sometime in maybe in mid-February or late February, we could have another session. And my only advice to you, see, as I told you, I started off, I wouldn't say advice, my suggestion, I started off with this technology because N. Chandra, whom I respect very highly, who's heading Tata's today, he said it is one of the most fundamental technologies, and the more you read it, and my knowledge on this is very, very limited. It's limited to whatever I get time to read. But so we had a good mix of a conceptual session and practical session with Rehan. And I just want to say a couple of words about Rehan. I know their dad very well. He's my schoolmate, and he's one of the most generous individuals I know of in the world. I mean, the kind of his generosity, if I can speak for volumes on what he has done for India, in terms of, even though he currently shuttles between Vancouver and Dubai. And I was very fortunate that I was able to get Rehan and Zishan speak at such short notice, because what happened was I was busy filing my income tax returns till 30th September, and I finished filing I had to file 6 income tax returns, and I finished it at 6 p.m. and 6:30, Nirmala Sitharaman announced the extension. Otherwise, the invite and the outreach would have gone to all of you much more earlier. So thank you for your valuable time. I'll be sharing the resources what we discussed, and my request is that just fill in the feedback form, which it's a very simple form, which is a Google form, because it helps us evaluate what kind of things that we can do in the future. Okay. Any questions?
Thank
Last
you so
question?
much. Thank you everyone. Thank you for the kind words. Thank you for the kind words, Mahesh, sir.
Thanks everyone. Yeah. Thanks, Mahesh, Jishan, and
Yeah.
Rehan.
Thanks.
Thanks.
Thank you.
Bye.
Thank you.
Thank you.
Thank you. Thank you.
Hey, thanks, Mahesh,
Yeah.
Rehan, and Jisan.
Yeah.
Lovely, huh? You guys rock, huh?
Thank
Mahesh,
Thank you, sir.
you are the guru as always, and then I'm happy that you brought 2 younger gurus here.
Yeah.
So nice here, so nice. Mahesh,
Yeah.
great job, man. Great job.
Thanks. Yeah.
Thanks. Bye. Bye.
Thank you. Bye.
Okay.
Thank you. Bye bye.
Mr. Zaveri, it was useful. Zaveri bhai, Kamlesh bhai. One second. You have to unmute. You have to unmute yourself. 1 second. No, I cannot hear you.
Okay. Okay. Now can you hear me?
Yes.
Yeah. First of all, Happy New Year.
Thank
And
you.
this was fantastic. I was always curious about this Bitcoin and blockchain.
Yeah.
Today I understood a little bit about it. It's not easy to understand a lot because it's the first interaction I've had. But I think it's very useful. And one thing which appears to me is there's a big future for both these things going into the future. A lot of it probably will depend on the regulatory and tax implications, which we will find out as we go along. But there's no question in my mind after February, when you have the second meeting, and you tell us a little more about how to buy, what to do, this is going to be a huge investment opportunity, and you can grow your money maybe even more than in the stock market. This is what I think. This is what I get a sense of from what you have said, and Zishan has said, and Nishan has said. Yeah.
Kamlesh bhai, coming from you, I just want to share the background, a bit of your background to the other people who are there. Both Ali and Mahindra are well known to me. Kamlesh bhai's dad has set up the diamond bourse in Maharashtra, in Bombay, and he's one of the most astute and the most respected businessmen in India in the jewelry industry. And you know, he was my neighbor till about 2 years back, and now he's moved. He's moved to South Mumbai. I stay in North Mumbai, and I always look forward to his insights and his guidance. And hopefully, after COVID, Kamlesh bhai, we will catch up and we will
Yeah.
meet. I respect his thoughts and
Yeah.
guidance because he's one of the most practical and I mean, he's done a lot of great stuff in his life, which I would like to, you know, emulate if I can in the future. Thank you, Kamlesh.
Thanks for your kind words, but you forgot to say the Bharat Diamond Bourse, although it was conceptualized by my dad, after he passed away prematurely in 91, and then it came up under my stewardship.
Okay.
So I spent a lot of money in those days, and public money, a few hundred, almost 1,000 crores of diamond people's money. But it was a good experience, and I thank you, Zishan and Nishan. Know your name?
Zishan and Rehan. Rehan and Zishan.
Rehan. Yeah, thanks a lot. I thought it was a brilliant presentation for someone who knew practically nothing about it, and I really want to thank you for it. And I look forward to some further inputs later on.
Yes, we will have my February session is a promise, but we will be doing it in the second half of February. You know, because actually I am doing this AI course with Microsoft, and it finishes on February 17th. You know, so I really have to devote 24 hours on that course. So I'll get time only after February, so I will do it that time.
Definitely.
Thank you.
Good. Thanks a lot.
Thank you.
Thank you, sir.
Bye.
Yeah, bye. Ali joins us from Lahore. Ali, are you there still? No, I think I don't know whether I can hear him. Okay. Ali's you know, he's a good. I mean, he's joined us from Lahore, Pakistan. So I know him from last many years, and it was I didn't get time in the beginning to introduce each one of you because, you know, actually what happened last night, I was trying to add both Rehan and my sons as co-hosts. It would have made logistics easier, but we'll try and do it the next time.
Next time, no problems.
Thank you. I think we'll close the meeting for now, and thank you for your time.
Thank you so much.
Thank you very much.
Thank you, sir. Have a nice day. Thank you.
Take care.
Thank you, Rehan, Zishan, once again.
Thank you, Mahesh sir.
Thank you, Mahesh sir. Thank you.
Take care.
Thank you. Bye.